And talk about Ridgepost Capital, just posting earnings. The CEO, Luke Sarsfield, joining us right now to talk a little bit more about that after his assets crossed $50 billion in the second quarter. You've done a lot of growing as of late.
We've been trying. Obviously, we're really focused on expanding the platform and serving our clients.
So give me a sense here, because you're more focused on the institutional side, fund to fund.
Institutional and third-party retail.
And you are third-party retail.
Yep.
But kind of break that down, because, I mean, these are kind of a hodgepodge of businesses that you've kind of melded into one cohesive company here. So give me a sense here as to who you are going after most. Is it the
so when you think about what we have a bunch of specialized, targeted offerings across the private markets, venture capital, private equity, and private debt. So we can really be a full solution provider. And so I think there's a lot of interesting dynamics there. There are certain clients of ours that want to engage with us across one or several parts of the portfolio, and there are a lot of clients who want to engage with us more holistically. As you can imagine, institutional clients, large allocators, insurance companies, pensions, sovereign wealth funds are going to be much more interested in what we can do for them across that full spectrum of offering, and we're really focused in the middle and lower middle market. And so our ability to do that, I think, is differentiated for them.
Well, let's talk about that a little bit more. We just I think it was just yesterday, we had Randy Schwimmer from Churchill Asset on, who's, of course, been banging the drum on the relative attractiveness and safety of the lower middle market here. Is that just because it's, AI proof, or it's more economically resilient? What is the selling point?
I actually think it's really different. And I think sometimes the risk is people hear middle market, they think smaller, and they think riskier. In fact, quite the opposite is true. It's actually more stable and more resilient. Let me tell you why. First of all, a lot less capital going against a much broader opportunity set. We have 5 times the GPs of the upper market, 10 times the companies that we're able to invest in. We can be much more targeted, much more selective. Number 2, we can buy the companies in the right way. In the upper market, you're looking at deal multiples that are, double-digit kinds of EBITDA multiples. We're buying things at 7, 8, 9 times EBITDA, and with a lot less leverage, right? We're buying things with 3 to 4 times leverage, upper market 6, 7 times leverage. The net effect of all that is we're getting great assets, we're getting them at the right price, and then to your point on AI, we can bring AI and we can bring a lot of operational excellence to bear to make them better, to make them more resilient, to help them grow faster, and ultimately we have a broader exit pool because it's all the large folks we talked about.
Are you seeing, though, but you got to be seeing a lot more competition there. I know you're seeing a lot more competition there.
I would say, look, obviously it's an attractive part of the market, and of course, when there's attractive parts of the market where there's an opportunity set, people come to it. But there's 2 things we have, I think, that are really powerful. One is the benefit of incumbency. We've been at this for 25 years in some cases, even more in some cases. Our largest strategy, RCP, just celebrated their 25th year anniversary. They have been doing this an incredibly long time, and so that durability, that flywheel that they have in the middle market is something that nobody else can replicate. The other thing, from the very genesis of all our strategies, we have captured data, voluminous data, longitudinally over the 25 years in all sorts of different ways. And so the power of the insight we can derive from that data relative to somebody who's newer to the space, it's just massively positively differentiated.
I do have to ask you about one of the other businesses under your the Ridgepost umbrella, and that is on venture debt itself. That's totally different.
Absolutely.
I assume that's totally different than the lower middle market stuff.
It is lower middle market venture debt, but it is venture debt.
Venture debt, but it's a different type of company, right? Or
yeah, I would say so. Our venture debt, it's called WTI, Western Technology. It's our venture debt strategy. By the way, they were founded in 1980, so they have been at this an awfully long time. Again, focused on the durability of the franchise. But generally, we are not focused on what I would call the household names in technology that you're hearing every day.
But a lot of what WTI did back in the day invested in companies that are now household names.
They ended up being household names, but they didn't start there when they were doing the initial investment.
Is that harder? Is it harder to do something like that, where you are looking for the next Facebook or Google or whatever?
Look, I think the reality is they've been doing it a long time. They have a great network of relationships. They're a trusted partner to all the VCs. They offer an incredible kind of financing solution package to entrepreneurs, and people like to do business with them. And so they've been incredibly successful, and I think they continue to really grow and scale that business.
Just real quickly, only about a minute left, but I do want to go back to the competition thing, because I feel like in the middle market, it was kind of, you had a small group of players that kind of had, the ball to themselves. You're seeing some of the big players come down now. You were at a big bank.
Trying to.
Yep. I mean, you're Goldman for a gazillion years, and so, I mean, you're aware of this.
100%.
Does it worry you at all, though, that maybe the Apollos Lowe's and maybe not Goldman, but some of the others ones will finally sort of say, we really want a piece of this and we're going to take it?
I'm sure they'd like a piece of it.
Yeah.
Respectfully, I think they're incredible at what they do.
Yeah.
I think we're really good at what we do too.
Yeah.
Those things are different things, and I think there's a difference between being a local and a tourist.
Yeah.
And I think we're going to remain as the locals in the middle and lower middle market, at the tourists, at the locals in the middle and lower middle market.
All right, Luke. Well, great to have you here.
Thank you so much. Really appreciate it.
Luke Sarsfield there, the CEO over at Ridgepost Capital.